Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The headlines: U.S. President Donald Trump asks for more time to revive the American economy after a surprise first quarter GDP contraction. The Bangko Sentral ng Pilipinas expects inflation to slow even further this April, possibly even hitting its lowest level since 2019. Gold prices are expected to stay above the $3,000 level amid rising demand for safe haven assets. And the U.S. and Ukraine sign a landmark deal to fund the reconstruction of the war-torn country, strengthening long-term economic ties. First, let's take a look at how financial markets performed overnight. U.S. stocks closed mixed on Wednesday, with the Dow Jones Industrial Average and the S&P 500 recovering to finish at session highs after a late-day rally. The gains erased most of the earlier losses, triggered by a surprise contraction in first-quarter economic growth, the first decline in 3 years. Advanced GDP data from the U.S. Commerce Department showed the economy shrank by 0.3% in Q1, missing expectations for a 0.3% contraction.
Stocks just came off of a 6-day run, which basically happened because of Trump's reprieve after a 90-day gig. So his concern about keeping markets good and judging his presidency by how well the market does is still alive and well, which is good. But GDP was a negative 0.3. You had a disparity in some of the predictions. You had FactSet at around a positive 0.8. You had Bloomberg at a negative 0.2. So there's a wide range. But when you look under the hood, you see consumer retail on that was about 1.8, which is big. That was a great number.
The Dow Jones Industrial Average rose 0.4%. The S&P 500 edged up by 0.2%, while the tech-heavy Nasdaq slipped by 0.1%. Over in Europe, stocks closed higher. The UK's FTSE 100 gained 0.4%. Germany's DAX rose 0.3%, and France's CAC 40 added 0.5%. U.S. President Donald Trump is asking for more time to revive the American economy as pressure mounts following a surprise contraction in the first quarter. Advanced GDP data from the U.S. Commerce Department shows that the economy posted its first quarterly decline in 3 years, weighed down by inventory adjustments as companies rushed to import goods ahead of Trump's planned tariff hikes. The weak performance comes amid slipping popularity ratings and growing concerns over trade policy uncertainty, with ripple effects expected across global supply chains, export-driven economies, and key trade partners like the Philippines.
In the first quarter GDP numbers just out today, core GDP, now we're removing distortions from imports, inventories, and government spending, was up plus 3%. But this is Biden's economy because we took over on January 20th. And I think you have to get us a little bit of time to get moving. But this is the Biden economy. But we still had and we've had a lot of things happen since November 5th that helped this economy.
Philippine industries most at risk include electronics, semiconductors, and apparel, all of which depend heavily on U.S. and integrated global supply chains. Business process outsourcing firms may also see investment decisions delayed if the U.S. economic outlook remains uncertain. And while the U.S. grapples with its own economic challenges, there are signs of fiscal strain here at home as well. The government deficit widens to 478.8 billion pesos in the first quarter of the year. Data from the Bureau of Treasury shows this is more than 75% higher than the 272.6 billion pesos recorded in the same period last year. The BTR explains the wider gap came as expenditures rose to 1.477 trillion pesos, outpacing revenue collections of 998.2 billion pesos in the first 3 months. The growing deficit signals heightened fiscal pressure amid spending on infrastructure, social programs, and subsidies, with implications for borrowing plans, credit ratings, and the timing of future tax reforms. The growing fiscal gap reflects the government's push to spur growth through higher spending, but pressures on the economy are coming from more than just the budget. The Philippine trade gap balloons to $4.13 billion in March, highlighting growing strain on the country's current account and potential risks to peso stability and import-heavy sectors. Data from the Philippine Statistics Authority shows this is over 20% higher than the $3.35 billion recorded in the same month last year. It's also the widest trade deficit in 2 months, following the $5.12 billion gap in January. The deficit widened as merchandise exports picked up to $6.59 billion, while imports climbed to $10.72 billion, fueled by stronger demand from capital and consumer goods ahead of the dry season. The combined pressure from a widening budget deficit and trade gap could limit the Bangko Central's flexibility to cut rates and keep the peso exposed to global volatility in the months ahead. Headline inflation is expected to slow further, easing from 2.1% to just 1.3% in April, potentially strengthening the case for monetary easing amid growth concerns. In its latest forecast, the Bangko Sentral ng Pilipinas cites lower prices of rice, fish, fruits, and vegetables as key drivers of that slowdown. If realized, April's inflation would mark the slowest rise in consumer prices since November 2019, when it dropped to 1.2%. However, the BSP warns that this downtrend may be partially offset by higher electricity rates and train fares, underscoring the risk of sticky costs in transport and utilities. A softer inflation print could reinforce market expectations for a rate cut in the coming months and provide support to growth-sensitive sectors and investor sentiment heading into the second half of the year. The Philippines' BBB credit rating from Fitch is a strong vote of confidence, especially amid heightened geopolitical tensions and global trade uncertainty. Finance Secretary Ralph Recto says that the rating affirmation highlights the country's solid economic fundamentals and the credibility of ongoing reforms. He notes that strong credit worthiness has helped lower interest rates and improve returns for Philippine bonds. Fitch recently maintained the country's BBB rating with a stable outlook, citing robust medium-term growth and prudent fiscal management. The stable outlook is expected to boost foreign investor confidence and give the government more room to raise funds at a time when global capital flows are turning more selective. SM Investments Corporation, led by the Bilyonaryo C family, defies global headwinds in 2024, posting a record 82.6 billion pesos in net income, powered by robust performances across banking, property, and retail. Sujin Kim has the details.
SM Investments Corporation posted a record-breaking net income of 82.6 billion pesos in 2024, up 7% despite inflationary pressures and global uncertainty. Nearly half of total earnings came from the group's banking arm.
Our banks account for 49% of group earnings. BDO Unibank delivered earnings growth of 12%, while China Bank achieved 13% earnings growth. Both banks delivered strong double-digit loan growth and improvements in asset quality, reinforcing our leadership in the Philippine banking space.
The group also accelerated retail and property expansion, opening over 600 new stores, 70 free bank branches, and 2 new malls, mostly outside Metro Manila.
From a position of market leadership, all of our businesses are following a strategy of expansion, investing in footprint to create larger markets, and serving more Filipinos, especially in the provinces.
Beyond core growth, SM continues to deploy capital into high-growth sectors such as geothermal energy, logistics, and the MSME ecosystem.
Our founder, Henry C. Sr., believed that business growth and social progress are intrinsically linked.
Despite headwinds from U.S. tariffs and weakening global market confidence, the group maintains a strong outlook, anchoring its strength on domestic consumption.
Now, in the case of SM, the company, the core businesses in particular, retail, bank, and property, are closely tied to the domestic economy and the everyday needs of Filipinos. These sectors continue to show stability and relevance even as market conditions change.
Sujin Kim, Bilyonaryo News Channel.
Philippine exports to South Korea plunged 29% in the first quarter of 2025, underscoring trade imbalances despite a new free trade deal. Data from the Philippine Statistics Authority shows exports fell to $735.64 million, down from $1.03 billion in the same period last year. In contrast, imports from South Korea rose by 8.2%, reaching $2.28 billion from $2.11 billion. These figures come just 3 months after the Philippines-Korea Free Trade Agreement took effect. Still, South Korea emerged as the Philippines' top source of investments during that period, with commitments totaling 10.45 billion pesos. This according to the Philippine Economic Zone Authority. The drop in exports shows Filipino businesses may need more time to benefit from the trade deal, but strong Korean investments point to long-term confidence in the Philippine economy. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. The peso appreciates to its strongest level in over 7 months amid growing uncertainty over the U.S. economy. Data from the Bankers Association of the Philippines, or BAP, shows the peso closed at 55.84 against the dollar on Wednesday, its strongest level since September 20 of last year, when it closed at 55.69. Analysts say that the recent strength is largely driven by weaker than expected U.S. GDP figures, which have tempered rate hike expectations from the U.S. Federal Reserve. A stronger peso could help ease import costs and inflationary pressures, but exporters and OFW-dependent sectors may feel the pinch if the trend continues. Now, gold prices are expected to stay above the $3,000 level for the first time as global uncertainty boosts the demand for the safe haven asset. A Reuters poll of 29 analysts and traders forecasts that gold could reach $3,065 per troy ounce this year, higher than the $2,756 predicted in a similar poll just 3 months ago. Expectations for 2026 have also risen, with average price estimates up to $3,000 from the previous $2,700 outlook. The main drivers: escalating trade frictions and a global shift away from the U.S. dollar. The outlook could boost Philippine mining exports and central bank reserves, but also signals heightened global risk sentiment ahead of crucial trade and monetary policy decisions. On another front, President Ferdinand Marcos Jr. is calling for an investigation into Prime Water Infrastructure, the private water utility firm owned by the Villar family, amid mounting complaints of poor service and high water rates nationwide. Malacanang Press Undersecretary Claire Castro says lack of service has no place in the Marcos administration.
Kakulangan sa serbisyo ay walang puwang sa administrasyon ni Pangulong Marcos Jr.
Meanwhile, House Assistant Majority Leader Jefferson Conghon earlier announced plans to file a resolution seeking a congressional probe into Prime Water once session resumes in June. The outcome could have wider implications for water concessions, regulatory policy, and investor confidence in public-private partnerships. The Department of Agriculture defends the government's 20 peso per kilo rice program following criticisms that the rice is low in quality and that the program is being used for politicking. On BNC's agenda, Agriculture Assistant Secretary Arnel de Mesa says that the program is designed to help Filipino farmers.
Gusto lang namin sabihin na matagal na itong programa ng ating kagawaran. In fact, nagsimula tayo dito sa ating P29 at saka yung rice for all natin, the same quality ng bigas. At sa loob ng
a political one, and says that the program is a direct response to the country's food security emergency. Currently, the Philippines has about 370 to 380,000 metric tons of NFA rice. The DA says that the program also helps farmers clear storage space during peak harvest season. In its initial phase, the program aims to deliver affordable rice to 800,000 households across the Visayas. Beyond food aid, officials say that the program is about supporting local production, but questions remain over its long-term funding, sustainability, and impact on market prices. A happy Labor Day indeed. Free train rides could soon become a Labor Day tradition as government plans to make it an annual treat for workers. This comes as cashless payments are also set to launch, promising a faster and more seamless commute. Our mobility correspondent G. Baroga has the details.
On April 30, Transport Secretary Vince Dizon hopped on Metro Manila's train lines to kick off 4 days of free rides, a directive from President Bongbong Marcos to honor the Filipino workforce. The free ride program runs until Saturday, May 3rd.
This year, 2025, at tuloy-tuloy na, every year, 4 na araw na libreng sakay sa LRT1, LRT2, at MRT3. Para sa lahat, no? Lahat. Manggagawa, commuters, estudyante, lolo, lola, libre na lahat. No? So, for 4 days.
Over 800,000 commuters a day are expected to benefit, even if it means an 80 million peso loss in revenue over 4 days. For the privately run LRT1, the government will shoulder the cost.
Almost 10 million pesos a day. So siguro kulang 40 million ang LRT1 revenues, which kung isipin mo naman, sa laki ng ginahawa ng ating mga manggagawa, ng ating mga pasahero, maliit na bagay yan.
And starting June, commuters can expect a faster, hassle-free ride with the launch of cashless payments.
Magpapayag tayo ng sistema na meron tayong mga carousel o turnstile na hindi ka na kailangan bumili ng ticket, no? Telepono mo lang, yung GCash mo sa telepono, itatap mo, pwede na. Kung meron kang credit card, pwede mo rin.
Security upgrades are also underway. Pilot testing to remove X-ray machines from MRT3 will begin next week, replaced by K9 units and high-tech CCTV systems at busy stations like North Avenue, Cubao, and Taft.
Meron tayong more than 600 dogs doon na ready na for deployment. At magdadagdag tayo ng mga high-tech na CCTV cameras. At magdadagdag din tayo ng security presence.
Secretary Dizon also paid a visit to LRT2 for the first time as DOTR chief and is now studying to add more trains to improve service. For BNC Mobility, G. Baroga.
The Department of Transportation, or DOTR, is looking to privatize at least 15 airports by 2026 in a bid to boost regional airport operations through private sector enterprise. DOTR spokesperson for business infrastructure, Maricar Bautista, says that the plan is part of a broader push to place 20 airports under public-private partnership, or PPP, agreements by 2028. Airports being evaluated include those in Iloilo, Davao, Lawag, Bicol, Bacolod, General Santos, Siargao, Dumaguete, and Busuanga. 7 airports are currently under PPP, including Ninoy Aquino International Airport and Mactan Cebu International Airport. The expansion of PPP deals in aviation is seen to speed up infrastructure upgrades while relieving fiscal pressure on the national government, with bidding for several regional airports expected to open as early as late 2025, amid strong interest from both local and foreign investors. Motorcycle taxi operator Move It denies violating government rules after transport regulators move to suspend its operation in areas like Cavite, Cebu, and Cagayan de Oro. The LTFRB claims Move It exceeded the 15,000 rider limit under the pilot program for motorcycle taxis, but the company says it has stayed within that cap. If the suspension takes effect, up to 14,000 riders could lose their jobs. Our mobility correspondent G. Baroga returns with the details.
Motorcycle taxi player Move It is pushing back hard against a new order from the LTFRB, insisting it has been fully compliant with the rider cap guidelines set by the Technical Working Group. The regulator has ordered Move It to halt operations in Cebu and Cagayan de Oro and to cut down its rider base in Metro Manila, citing a violation of the 15,000 rider limit. But Move It says that's simply not true.
Since maging bahagi kami ng Move It last August of 2022, no? Nagbase kami dun sa MC Taxi Guidelines na nakasaad noong November 24, 2020, which was all players, no, will have an allocation of 15,000 riders each.
The company has filed a motion for reconsideration and is asking for dialogue, not discipline.
Open kami for dialogue with them, no, sa mga kinauukulan. At nang sa ganon, mabigyan po natin ng solusyon, agarang solusyon ito. No? Ang gusto lang ho namin talaga rito ay magkaroon ng pagkakapantay-pantay na pagtrato sa lahat ng MC taxi players at masigurado na magpapatuloy ang buhay ng aming mga riders.
According to Move It, 14,000 riders now stand to lose their income, 8,000 in Metro Manila and 3,000 each in Cebu and Cagayan de Oro. The company vows to fight for them.
We will definitely stand by our riders. No? Tutulungan namin sila hanggang dulo. Kung saan man makakarating ang aming paghingi ng tulong, gagawin po namin yan, no? Para lang maipakita na talagang sinusuportahan namin yung mga rider namin.
BNC Mobility sought comment from the DOTR but has yet to receive a response. For BNC Mobility, G. Baroga.
We're taking a quick break. Business 360 will be right back. Welcome back. The Philippines and New Zealand formalize a visiting forces agreement, signing a landmark defense deal to strengthen military cooperation amid growing regional security challenges. President Bongbong Marcos witnesses the ceremonial signing in Malacanang as New Zealand's Defense Minister Judith Collins and Philippine Defense Secretary Gilbert Teodoro seal the agreement. The VFA sets a legal framework for military cooperation, allowing for joint exercises, training, and rapid deployments between the two nations. Collins says that the deal will allow both defense forces to work together more effectively in times of urgency.
Militaries already work well together, and this agreement will create the conditions for even more seamless cooperation in the defense space.
The minister shared earlier that there are 100,000 Filipinos in New Zealand now who, if they're listening right now, maraming salamat po na naging excellent ambassadors kayo po ng Pilipinas sa New Zealand at reputasyon at dangal ng Pilipino inangat ninyo.
This marks New Zealand's first VFA in Southeast Asia, signaling stronger defense ties and a shared commitment to regional stability. Vice President Sara Duterte receives a summons from the Office of the Prosecutor in connection with a sedition case stemming from an alleged plot against the presidential family. The National Bureau of Investigation previously recommended that the Justice Department file charges of grave threats and inciting to sedition against Duterte over her supposed remarks about a kill plot targeting the First Family. If the case moves forward, she is found guilty, VP Sara could face up to 12 years in prison, according to the NBI.
Hindi na tayo nagugulat, no, na merong case na final kay dating spokesperson, Attorney Harry Roque, dahil isa talaga siya sa mga malakas ang boses at malakas ang loob na magsabi kung ano ang mali sa administrasyon ngayon.
The case marks an unprecedented legal move against a sitting vice president, raising questions about due process, political tensions, and rule of law ahead of the 2025 midterm elections. PNP Chief Romel Marbil and CIDG Director Nicolas Torres say they are ready to face a possible ombudsman probe following controversy over the arrest of former President Rodrigo Duterte. The two officials are among those Senator Amy Marcos wants investigated for alleged grave, arbitrary detention and grave misconduct. But the Philippine National Police insists that they were merely carrying out their duties and only extended assistance to the Philippine Center on Transnational Crime.
They are prepared to answer any and all charges before any proper forum, but we have to reiterate na ang naging papel lang po ng PNP dito sa pag-aresto po kay dating Pangulong Duterte is we just extended a assistance sa PCPC who requested na tulungan natin sila para i-implement po yung red fusion notice po issued against the former president po. And they believe they acted within the bounds of law and within the mandate of their office.
The developing case puts the spotlight on institutional accountability and heightened political friction, with possible implications for law enforcement stability ahead of the midterm polls. The Lakas CMD party, a key member of the Marcos administration coalition, urges the NBI to prioritize its investigation into the controversial Oplan Horus document, which it claims is fake and politically motivated. In a letter to investigators, Executive Director Ana Capelia Velasco says the fake document published last week by a newspaper and spread on social media has damaged the reputation not only of House Majority Leader Manix Dalipe, but also of the entire party. Campaign manager for the admin senatorial slate, Representative Toby Tiangco, says Dalipe confirmed the document was fabricated. The House leader has also filed a cyber libel case against the Manila Times for spreading it. Meanwhile, Kabataan Representative Raul Manuel calls for action against fake news sources, but warns that such efforts must not violate free speech.
Dapat priority ng pamahalaan. Ito yung nababanggit ko rin sa mga hearing ng TRICOM na ang i-address talaga ay yung ugat. Kasi yung mga mensahe naman na lumalabas sa iba't ibang spaces, whether printed media man yan or online, meron talagang iilang tao na sila yung nagka-craft ng mensahe at nagde-decide na ito yung framing ng message, ito yung mga hindi totoo na ipapasok natin. Tapos sila yung ibibigay ng go signal na ilabas yan. Ang gusto natin balance, we target disinformation pero hindi natin nakikripple naman yung karapatan na ating mga kababayan or ng media. So yun yung ating principle moving forward. Kung merong mga kung sino man na tao or entity na actively nagko-collaborate dun sa mga masterminds talaga ng disinformation, edi to different degrees, meron silang dapat sagutin din.
The dispute underscores rising political U.S. President Donald Trump threatens to impose a tariff wall on pharmaceutical companies, saying drug makers operating in the United States could face new import duties after a certain period. A proposed 25% tariff on pharmaceutical imports is estimated to raise U.S. drug costs by nearly $51 billion annually, pushing prices up by almost 13% if the costs are passed on to consumers. That's according to a report commissioned by the U.S. pharmaceutical industry's main trade group.
We're going to be getting tremendous amounts of drug and pharmaceutical companies going to be pouring into the country. They're going to have to. They're going to have to. And we're going to give them a lot of time to do it, but after that, there's going to be a tariff wall put up. And they won't be happy about it, but they'll be happy if they start building right now.
For the Philippines, which exports generic drugs and raw materials for pharma manufacturing, the move could mean higher barriers to entry and tighter competition in the U.S. market, potentially impacting revenue streams for local producers and their supply chains. Ukraine and the United States sign a landmark agreement to establish a joint fund for reconstruction and strategic investment, a move seen to deepen economic ties while positioning U.S. interests in Ukraine's post-war recovery. Under the deal, Washington will gain preferential access to new natural resource projects, but it does not grant the U.S. direct ownership of Ukraine's mineral wealth or gas infrastructure. The agreement calls for the creation of a joint U.S.-Ukrainian fund that will receive 50% of profits and royalties generated from new resource permits granted by the Ukrainian state. The accord was signed in Washington following months of negotiations and is widely seen as a strategic blueprint for long-term reconstruction investment. Wildfires sweep through the outskirts of Jerusalem on Wednesday, prompting a statewide emergency and the evacuation of 3 communities. Fueled by strong winds and extremely dry conditions, the fires sent thick smoke across residential areas and injured at least 13 people. No fatalities have been reported. Israel deployed over 120 fire units, aircraft, and military search teams to contain the blaze. Italy and Croatia have sent firefighting aircraft, while additional support has been requested from Greece, Cyprus, and Bulgaria. Several Memorial Day events were canceled, and officials continue to monitor the situation as fire risks remain high. The escalating wildfire underscores climate-related threats to urban safety, air travel, and regional supply routes, as Europe and the Middle East face another severe fire season. Elsewhere in the world, severe storms strike the U.S. Midwest, leaving behind a trail of damage in Missouri, including homes, businesses, and a private airport in yet another weather event raising questions about infrastructure resilience and insurance costs. According to ABC affiliate KSPR, the National Weather Service believes a tornado touched down in Fremont Hills, Missouri's third largest city, with winds reaching up to 145 kilometers per hour. The storms knocked out power to tens of thousands, disrupting local operations and raising concerns about emergency response and energy grid vulnerability. One Missouri resident described the storm's sudden escalation.
Just kept praying that it wouldn't get as bad as it finally got. And you couldn't hardly see anything because it was so foggy. We feel fortunate, and our neighbors have a lot of damage, but they're all alive.
Before we go, a front row seat to golf history comes with an unexpected bonus for the Ang family. Bilyonaryo Felix Ang, chairman of Katz Motors, together with his wife Grace and son Frankie, are front and center at this year's Masters tournament, witnessing Rory McIlroy finally win his first green jacket in a thrilling showdown against Justin Rose. But it's what happened off the fairway that made the experience even more special. A fireside chat with tennis legend Roger Federer. The Angs, well known for their leadership in the Philippine luxury auto industry, shared a few laughs, snapped photos, and capped off their Augusta weekend with an unforgettable star-studded surprise. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us. Keep it here on BNC, the Bilyonaryo News Channel.